To the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to another episode of the AJ Brown Show. Today is February 16th. This is episode 120. And my lovely esteemed host, the guy we named the show after, AJ Brown. Good morning to you, sir. How are you doing?
I'm doing well, Sip. Thanks.
We got a nice show lined up for us.
Yeah, we do.
We got a special guest that's going to be coming on and giving us a little bit of insight. But before we dig into that, I think the big headline is this S&P 5,000. We keep hitting new highs. We're getting economic data. What are your thoughts initially on where we've come versus last week? I mean, we're still hitting highs. Are you feeling optimistic?
Yeah, yesterday we closed at another high. I'm trading the signals as they come, but I can't help but continue to ring the bells that this is not sustainable. And again, that's my humble opinion, but it's based on looking at the technicals, but also looking at a lot of other pieces of data. We actually, just we keep getting tests to the downside. So if you don't mind me bringing up my chart already, Sip, but we had this little test right here. We had another test right here. And then on Tuesday, with the consumer price index coming out and it being, this was for January, it being a lot hotter than what was expected. People all of a sudden started to think about the Fed not lowering interest rates as early as March and May, but possibly putting it off to June. And that caused a little bit of negative sentiment. I mean, when you start to see a turnover, a churn between kind of the tech companies, those companies that here in the States are known for kind of innovating, and instead seeing some of the emphasis being placed on the higher, the creeping up oil prices and the energy companies associated with it, and or some of these regional banks getting a footing. And when you go back to the businesses that were not necessarily leaders in and saying they're what's propping up the market, I start to say to myself, there's a lot of retail money coming in. A lot of the folks in the distant past would have called that the dumb money. There's a lot of FOMO, like the market can't have any faltering. But at the same time, Sip, I'm seeing, whenever there's at all a hint of bad news, we see a little bit of a pullback. I mean, today we had our producers price index, which is wholesale inflation, versus the consumer price index on Tuesday, which was retail inflation. It too was hot, right? And so you're probably seeing a little bit of weakness in today's bar as well. Whenever there's a hint that maybe inflation still needs a little bit more tampering, or at least calming down, and that the Fed's not going to lift its rates at any time soon, that kind of, puts a little shot to the ego of investors, and it causes a little bit of a sell-off, and that's been happening more often. We've also got the fact that when we did have this pullback, it wasn't so much distribution that we could kind of like reload our guns. That's why we've got this consolidation pattern that's been forming in the uptrend, rather than like a show. When we get to the end of that consolidation pattern, typically the market is waiting for some sort of, I call it a little tinder, to either break out up or break out down. And I'm seeing the weakness to the downside. So I'm still trading the signals as I see them, which are still, neutral to bullish on my side. But I am definitely making sure I've got my hedges in place for a possible pullback.
And seeing as you've been in this space for quite a while, 20 plus years, does this kind of trend to the upside remind you of any other period in the past? And are we just kind of sitting, waiting for the Fed to decide whether we're going to go up or down? Because that next rate hike really can, determine new highs, or we're going to kind of cap out there.
Yeah, and don't forget the Fed came back. Some of the Fed presidents came back and talked this week, especially after the CPI and PPI, and they kind of calmed some of the, well, not so much the PPI because that was just released a couple hours ago, but that we had retail sales and we had industrial production on Thursday, which were all coming in. Basically, what the Fed said is, hey, our big indicator that we like the most is the PCE, personal consumption expenditures piece. And so, hey, don't put so much credibility into the CPI and even the PPI. But still, you can't ignore the news. You can't ignore. Basically, investors are uncertain, right? So there's this momentum, this optimism, but there's still this underpinnings like questions. Like, for instance, we've still got this yield inversion in place, which traditionally has led to some down times, right? That's been in place for quite a while now. And there is definitely economists out there ringing the bell saying, hey, this isn't natural. But at the same time, the Fed's been doing all sorts of things with quantitative easing and now quantitative tightening, which also is new to us. So, yeah, the scoop is that this, in my mind, is quite unsustainable for the long term, but the optimism is there. But I'm definitely I'm gonna keep saying I'm prepared for some sort of pullback in the medium to long term, if not in the next couple of weeks.
Yeah, and I just posted one of the notes from today, this morning, which we've been referencing for quite some time, that this is a perfect market for options traders that can profit more than directional moves. I mean,
Yeah.
unless you've been long this whole time, which you should be doing all right. I did come across an interesting tweet this morning that I just want to share, run by it with everyone. This blue chart here is the number of days of all-time highs in the year, and so far in 2024, we've hit all-time highs 11 times. And so this is where I was referencing the historical comparison, just because I mean, it's always weird as a trader when every day it's new highs, new high. It's like you're almost like, well, when's it gonna stop? Well,
Yeah.
it's like this emotion that attaches to you. But I think what I appreciate since we started the show, and I think what you're educating people on, is that options are a great tool to kind of combat that type of emotional trading,
Yep.
especially premium selling, because it's this concept of I want to sell something, and then if it falls in the future, I get to keep what I sold it for, right? It's like
Yep.
a main principle for you. So
And we
look,
are I gotta say, Sip, and I don't mean to whet people's palate, but I'm gonna do it anyway. Our guest is like primo at being able to use these different option strategies. So I'm excited to get him on. You mentioned also, like, when did I see this before? I mean, I saw this in the late 90s when there was a lot of stuff happening in Southeast Asia. With there was a Malaysia push, there was a Singapore push. Then I saw it again in the early 2000s, a very similar pattern with the dot-com boom. I saw it with the energy push and the housing boom in the mid 2000s and late 2000s. And then, it just seems to cycle and cycle and cycle. Um, it's almost like we've got amnesia as investors, at least the retail money does. So I think that the, pension fund managers, the mutual fund managers, the hedge fund managers especially, they've seen this pattern before and they're kind of like quite excited. They're almost and you don't want to put in any sort of bias on what the big money's doing, but it's almost as if they know that this is coming up and they're getting ready for a big profit. So again, I always like to arm my my folks that follow us on this show, my program participants especially, with strategies to ride on their coattails and kind of, you know, profit on what they're doing rather than getting caught up in, like, for instance, this overall optimism that doesn't seem like it's sustainable.
two follow-up questions before we take a break and bring our guest on. You said, like, you were talking about these bust comparisons, like the housing bubble, the dot-com bubble. I'm hearing rumors or speculation that it's potentially could be this AI bubble, because if you look at Nvidia,
Mhm.
right? Isn't Nvidia just like crushing it, and their market cap is like reaching 3 trillion, and there's like they don't have the fundamentals to support that. And could something like that, like, do you want to pull up Nvidia real quick, just because I know it's
Sure.
been like it's all over the news and all these headlines, and I'm curious if something like that to the downside could spur, because I mean, look at it, it's like what, $800 from.
Yeah, and it's interesting. That's in our portfolio, my family portfolio. We've had Nvidia since it was, it's split quite a few times. We've had it for a while now, and my wife was actually wondering, should we liquidate any of it since it's at such an all-time high. But I worry about going. This would be from a technical perspective called exiting on a leading indicator, right? Because this is extremely overbought right now. And from the fundamentals perspective, a lot of the fundamentals don't justify what's going on. But in my experience, what we want to do is not just trust the leading indicator. The leading indicator triggers us to be on point, to watch, but we're not going to do any sort of move until we see some sort of lagging indicator. Even if it's a fast moving lagging indicator, kind of kick in saying, hey, a top has been found. Now is your signal to take action, whether it be some sort of option strategy or even just, selling your underlying position. So I never worry about leading indicators telling me that something is overbought or oversold, because I have found in the past that things can stay overbought and oversold for quite some time. But what leading indicators do for me is they put me on point. They put me on alert to look for even a fast moving lagging indicator to actually give me my trading signal. So I can't emphasize harder that we can have all this kind of speculative discussion about what's going to happen next in the medium to long term. But when it comes to your actual investing and trading, my point is you trade what you see in the present. You trade what you're thinking about right now, what you're seeing right now, not what you're guessing, not what you're speculating, especially not what the talking heads on the TV, the radio, blog posts, even people like me, gurus, are saying. You really want to make your own educated decisions and use common sense, right? Don't get caught up in the emotional component of like, I want to make sure I take advantage of this because it's never been seen before. Great. But, use common sense and use the data in front of you, right?
Yeah, and Nvidia is, it's just all over the news, and AI this and AI that. We'll get into some more options stuff here, but I just wanted to, I don't know if you saw the Chat GPT released their video, text to video yesterday, and it's like flooding all the socials where like they're basically like, oh, overnight they're taking all the stock footage companies out of business, and some of the footage coming out of this AI stuff is crazy. So I don't know if it's busting anytime soon, because these new tools are coming out and they're really high quality. And I mean,
At some point, Sip, we've got to realize that these tools are basically very efficient. And again, I'm just giving my opinions here, but these tools are just very efficient at regurgitating and putting together what humans have already put out there into the database. And, if you look at some of these scientists out there, they've had the AI go back, regurgitate the data once and create an end product, and then come back and take that regurgitated data, and they've done it generation after generation. And about like 8, 9, or 10, the new regurgitated product that the AI hands you, because it's been just sorted, and because that's what it is, it's database sorting and stuff, it winds up turning into like mud, right? So you still have to have those creators out there. So we're going to have this thing like with any new technology, where the new technology comes on with a bang. Then we start to understand its deficits. Then we have to come in and fill in the gaps of this deficits, and then it becomes part of our society. So right now, there's this bang, and the bang could last for a while, and we could put some people out of work. We could see stock prices go very high in these companies. Then the deficits are going to start coming out. You're going to have to start bringing people back in that can fill in the gaps. And so it's just the life cycle of new technology, right?
Yeah, and I assume that the majority of our viewers are a little bit more savvy. So take experiment with these tools. Have them work in your favor. I know that we
Yep.
we always talk a lot about what's out there and how we can utilize it to make our lives a little bit easier. So we'll keep an eye on that. A lot of exciting stuff coming out of the AI world. We're going to go ahead and get queued up for our guests here shortly. I do want to give
Yes.
everybody a chance to uh, join AJ's daily workshop. He's got a wonderful free workshop that he puts on where he breaks down some of these strategies, some other strategies. Very informative. It's free. Go ahead and head on over to the link in the chat. It's gonna prompt you to sign up. Go learn some options trading. We've got a bunch more links that we're gonna be putting out, and we're gonna take a break and we're gonna talk a little bit more options to see how we can take advantage of these all-time highs using this wonderful tool of options trading. And as always, if you are watching, we are live, and you have any names that AJ or our special guests want to run through, feel free to throw it in the chat. Go ahead and ask some questions. We're going to take a break and get in some more good stuff. So sit tight.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
I should start calling you the webinar king, AJ. Every time we talk, it's 3 or 4 a week all across the country. And this is a great way to learn about some things that maybe other experts are participating, share information, and set it up so that anybody who's a participant wanting to learn is getting the best advice possible. And so with that, I think it's fair. Unless you got anything to add on our special guest, I feel like it's.
I mean, I got very excited when I heard that we would have this special guest on our show, because I was 10 years into my own trading journey, and I had been about 5-6 years into running Trading Trainer. And I was at a trading expo, and I picked up some of these books. One of them was, Trading the Option Greeks, and another one was The Market Taker's Edge. I think he's written some books since then. And I was looking over at my bookcase when I knew I was going to talk to him ahead of time. I talked to him a couple days ago, and I was like, oh my gosh, this is like the guru that we're going to have on this line. So I can't wait to hear more about kind of, his how he got to where he is and being able to guide us. But also, he's got some real awesome nuggets to share with us, Sip. So I don't think we should wait any longer. Let's bring Dan on the line.
All right. Dan Passarelli from Market Taker Mentoring in my hometown of Chicago. Welcome, Dan. Thank you for joining us.
Welcome, Dan.
How you feeling about today's markets?
Oh, man. First of all, thank you very much for having me, AJ. Really honored. Really appreciate it. How am I feeling about today's markets? Holy cow. Well, I guess the main way I feel is, as they say, you can't fight the tape. And so whether it's, like as AJ was speculating, hey, maybe we're a little topped out here and, we'll have a pullback or whatever. Doesn't matter, because you can't fight the tape. This market has a lot of steam behind it. Not a bad idea to play it cautiously just in case. But that's the nature of trading, I guess.
And so before we dig into some of the details of what's going on in the market now and, some positions that maybe you see some opportunities on, AJ did mention that you've written a couple books. You worked on the Florida the Board of Trade. Maybe a quick rundown of how you came to enjoy options and continue to advance your program and want to educate people. I think the viewers, the audience would love to learn a little bit more about that.
Yeah. So, well, a long time ago in this galaxy, I graduated college with a degree in finance and printed up a stack of resumes, which apparently people don't do anymore. Put on a suit, which apparently people don't do anymore.
And I know I don't.
Me neither. And I literally knocked on every door of the Chicago Board of Trade building, handing out those resumes. Got myself a job as a runner, making $9,000 a year. So tough to survive on that. Had to work a lot of odd jobs, but I found myself surrounded by a community of professional traders, and I learned from them. I learned from clerks who were going through it just like me, and worked my way up from runner to clerk to eventually being one of the biggest traders in my pit. And I guess all along the way, I learned to love options. In 2005, the exchange asked me to teach classes for them. And I wasn't sure if that was going to be my thing, but I figured I'd give it a shot and found that was my calling. Literally for the first time in my options career, which had already been about 12 years by then, I found people coming up to me saying, Dan, thank you. I was never able to make this work before, and now I can. And that keeps me going. So I kind of found my calling, and long story short, started Market Taker Mentoring in 2008. Perfect timing. Actually kind of did end up to be perfect timing, because that's when a lot of people really needed some help.
That's right.
Yep. Trading was easy before then, and started to get challenging. So I guess the rest is history. Wrote a couple books like AJ kindly pointed out, and get to be on TV a lot, which is kind of fun.
I got to say one thing about Dan Sip, and that is I always tell folks that you want to follow somebody who is not only doing what you want to be doing, and that's Dan, but you also want to follow somebody who can teach what he's doing. Because I've paid so much money to coaches over the years, and they could show me their trading, they could show me that they're successful, but man, they could not convey what the frick they were doing to me. And Dan has been able to do that. Dan is one of the best in the industry at being able to not only, do what he says he's doing, but also to convey, show people what he's doing, like teach them, make it so it's possible for them to do it. So I don't mean to keep, doing this to you, Dan, but you're like the OG of this kind of stuff. So I'm pretty stoked to have you here.
Well, thank you. That is very kind.
And that's primarily because options can be pretty complicated. They are hard. I mean, for new investors. So Dan, I have a question for you. The difference between being on the floor versus today's type of investor, has that, I mean, obviously it's changed, but do some of the principles still live? Is that kind of what you're educating?
Yeah, great question. Yes and no. When I started, when I left the trading floor and started trading in a retail account, like I imagine most folks here who are listening do, I had to relearn a lot of things. But I did have this advantage from having been on the trading floor where I really, really deeply understood volatility. And understanding volatility is at the heart of really understanding any option trade, because it's one of the things that you either make or lose money on, whether you know it or not, whether you like it or not, whether you want it or not. And so having also traded basically every option strategy there is thousands of times, and understanding how volatility fits into there, I was able to kind of take that information and it sure gave me a big head start in my relearning. And it's enabled me to kind of pass that on to our student traders who maybe they're really good at calling direction. Maybe they're really good at, selling option premium like AJ. But I give them this extra thing so that they can get extra edge on their trades and give them that head start as well.
Do the tools help in the sense that like these apps are on your phone, you really get like clarity? I mean the ease of trading options, it's never been easier than throughout history.
Today.
I just pull out my phone and I'm slinging straddles over here.
Yeah, it's amazing. And the tools that can be developed now, just because we have the technology, are incredible too. And when I started trading options as a retail trader, when I started teaching options to retail traders, from my background on the trading floor, I would just go and look for opportunities across the entire universe. And I found that that's time consuming for me. And I found that our traders, they're looking for the easiest way to do it. And I mean, frankly, so am I too, right? There's only so many hours in a day. So I started developing some tools, one of which that I guess if we have a minute to talk about is our short squeeze finder.
That's the topic of the week. Let's talk about it.
All right. So
do you want to share your screen? You should be able to load it up in there if you want to.
Oh yeah, that's a great idea. Let's see here. This one with the arrow is my screen sharing.
But before we do while you're working on that, I do want to let everybody know that you and AJ are putting on a special webinar where you're going to go into these details a little bit more. You're going to have an opportunity to answer some questions for people. So
deep dive.
The link to that is in the chat. So if you want to learn more about Dan and the Market Taker Mentoring Program strategies, head on over there, sign up, and it should be great. I mean, all of AJ's webinars are great. So that's kind of the primer for bringing Dan on to the show. But yeah, let's get into the topic of short selling, using options to short sell. And it sounds like you have a nice little tool to help you do that.
Yes. So this is how this is related to short selling. Is we take advantage of short selling in opportunities where maybe it's a little bit overdone, and what happens is what is called a short squeeze. So a short squeeze is when there's a stock that has a lot of short selling going on, like the float, which are the available shares to trade. If there's more than, and this is our rules, and if you're taking notes, now's a great time to bust out that pen. If you're driving, just replay this later. But yeah, so our rules are when there's more than 15% of the float being shorted, could be all by one person, could be a few institutions. That's when it's pretty heavily shorted. And sometimes we see it a lot more shorted. And so what can happen then is when the stock starts rising, the professional traders who are short a lot of these shares, like millions and millions of dollars, with investors they have to answer to, they have to go and buy those shares back, right? Like, and this is one of the rules that I love to teach to our student traders. When the trade's going against you, have a risk management plan in place. That's what professional traders do. So when the trade's going against you, you can't just sit and wait and hope that it goes back your way. These traders who are short have to go in and buy a whole bunch of these shares. And that causes people who trade momentum to see this and say, oh, look, this stock's going up, I'm going to jump on. And then that fuels the fire more. And the market, for the more advanced folks here, the market makers who are short options and short gamma, their hedges, they have to buy more stock to hedge because they're negative gamma. And it becomes this, can become this vicious circle. So this was a stock, Blink Charging. Earlier this week, we got a signal on our short squeeze scanner, and it came right on time, right? So, you look at this and it went from 296. Well, what was the low here? 297 up to, well, yesterday it hit a high of 362. Now, fair enough. That doesn't look like this massive move. And this is a stock that's trading $2 or $3. You could be like, okay, big deal. But it is big deal because when you use options to trade this, you can get a super leveraged profit in a very, very short period of time. Here, I mean, it could have been same day, intraday trading, or it could have been just the very next day.
Overnight, yeah.
Yeah, like totally overnight, and boom, boom, boom. You can get a lot of these really leveraged profits. And look, like $2 stocks for a lot of people aren't super sexy to look at, but it doesn't matter if they're talking about it on CNBC. It doesn't matter if they're talking about it in the New York Times. These are opportunities that you wouldn't find if you didn't know to look for them.
AJ, what's your experience with the short squeeze? Because I know we've discussed some of the famous ones over
the famous
over the
ones,
past
right?
couple of-
GameStop,
the one they're making
AMC
movies about.
Yeah. No, it's a big deal, right? And what he's talking about when he explained the self-fulfilling prophecy where the hedge fund, the fund managers have to cover, and then it gets compounded by the market taker mentor, the market makers having to, adjust their positions accordingly by buying stock. It creates this momentum that, if you know what to look for, and Dan has those tools at his disposal. If you know what to look for, you can ride the coattails of these moves. And that's really, in my mind, as retail investors, where we can't actually move the markets like the big money, that's what we do. We follow and we find these, morsels of information that are opportunistic, right? Things that we can follow in people's footsteps that are actually moving the market, see these self-fulfilling prophecies pull through. And that's exactly what he found here with Blink. That's awesome. That's awesome.
All right. So Blink, any others that come to mind, Dan? Anything that you're keeping an eye on?
Yeah, I mean, we've had a number of them, and it's interesting. We tend to see a lot of these when the market is, let's just say, not down a lot. If it's on a tear like it's been for the past 3 months, oh my goodness, we see a ton of them. I mean, yesterday I'm looking at the ones that came up. Oh no, this is from 2 days ago. I mean, geez Louise, we had about 15 of them that hit. And like every trader can't trade every opportunity out there. And the thing with short squeezes too is that every opportunity is not necessarily one that we want to jump on. We want to screen these, and so
that's the key, right?
Yeah, that's totally the key. So that we're cherry picking only the ones with the absolute best of the best opportunities to work out.
High probability. Yep.
All right. Well, it seems as if you're going to be digging into that a lot more in the upcoming webinar. Some more strategies, some more insights into how people can become a part of your program, get a little bit more information on that. So once again, the link to that is in the chat. Highly encourage everyone to go check that out. And
you know what, Sip? I want people to register for that webinar, whether they think they can be there live or not, because we will go ahead and to anybody who's registered. So you have to register. We'll go ahead and push a replay out. So even if you can't be there live, you do want to get this details from Dan. I mean, I can't help. I'm going to throw a chart up really quick. I can't help but point out that since the bottom, like at the beginning of December of the VIX has been ever so slowly moving up. And one of the things that Dan's going to cover on the webinar that we really don't have time to talk about now is some of the volatility that he was, talking about, his claim to fame, where he actually got this understanding on the trading floor and then relearned it as he became a retail trader and then ultimately a professor of the topic. That VIX is rising. It's still below the mean, but it's rising and it creates all these opportunities. And he's going to do some deep dives on that too. So, this is, what I'm doing with a lot of the theta decay, the time decay plays. is one aspect of options. But you and I, Sip, always talk about how there's like, I think last time some mathematicians looked at it, like 27 different ways to profit on different option strategies, and the selection of those options with strike price and expiration date. And Dan has that just through experience, through repetition in the back of his head, and he can explain it really well. So you guys go and register for next Wednesday's workshop, even if you can't be there live. Of course, if you're there live, you'll be able to ask Dan questions in the chat section, and he'll be able to cover some of those topics, right then and there. You don't have to wait for, text messages and emails to go back and forth with day turnaround times. You get your answers right then. But I urge you all, whether you're going to be there or not, to get on that workshop. And Dan is just a gold nugget, and it's amazing that we actually get to mine him a little bit for his information.
So once again, the link to that is in the chat. Dan, we've got our speed round next. You could stick around and give some insight if you got the time. Otherwise, we could
see you on Wednesday.
People can catch you on your webinar. So you just let me know if you want to chime in on any of these, because we've got some wonderful folks, some wonderful members from all across the country who are throwing out names to AJ every week, and we pick a few out and we throw them in the chat, and we throw them on the chart, and AJ goes through it. So let's go straight into our speed round here. AJ, the first name that we're going to cover is one that we've talked about a lot, and there may have been a short squeeze story to this one. Maybe Dan has some insight, but this is Paul from Tacoma, Washington, interested in Carvana, ticker symbol CVNA.
Yeah. Carvana, pretty much, if you go back a year, looking at Carvana, they were set out to pasture, to go and die. And they've basically reinvented themselves and made sure that whatever funding they had left, they made it work for them. In fact, this most recent, they're about to have another earnings announcement here after market close on February 22nd. But this most recent earnings this last time on November 2nd, they actually showed that they took all that investor dollars that was left over and made a profit. They are in this kind of sideways choppy pattern, which I love, right? I like to leg into some different positions. And so I've been myself selling some just premium whenever they kind of get to the top of their channel. I'm selling some premium because I put some of Carvana in my long-term portfolio that I can use as a covering position. So, Paul, let's take a look at the more recent chart, and I'll give you some thoughts, at least my 2 cents here. Carvana's coming towards its most recent highs here at 60. And so I'm looking for some sort of signal. Again, I'm not going to trust any of the leading signals. I would use some sort of lagging signal to identify a top. And by the way, if you want, don't forget you can go and get a free access to our web portal and download our little indicator that we've created here for some of the different platforms. We'll actually be releasing that indicator on some different platforms above and beyond Thinkorswim and Metastock that we've got so far. But I'd wait for that indicator to pop, and I would use it as an end of day indicator, and then make sure that there's follow through on the subsequent trading sessions. And I would use that in my mind to either do some sort of naked put type, cash secured put type trade. Or in other words, I don't think I'm ready to short Carvana right now. I would rather be in a long position and then sell call premium, buy protective puts, and roll those trades out month in and month out until I see some sort of move. But I'm interested to hear what Dan has to say. Dan, you're still on the line. What are your thoughts on Carvana?
Yeah, so Carvana is an interesting one that hits our options rater short squeeze finder on a fairly regular basis. You can see this massive move here, you can see this little move here, and the move that we're in now. What's interesting is that this is an $11.5 billion company. That's the market value of the shares. There's 35% of the available shares, the float, are shorted. That's, I mean, that's like $4 billion worth of stock.
A lot of people are betting against this one.
A lot of people are betting against it. And the fact that this is not a $2 or $3 stock, it's a $54 stock, it just sort of ups the ante. I'm glad it's yours and not mine this time. Yeah, so that kind of ups the ante a little bit, because we've gotten some of these little short squeezes that have happened. And when I say little, I mean, you know, we're talking about the stock, you know, rising by like 80%. But if one really, really takes hold, I mean, the short squeezers, they have a lot to lose on their $4 billion bet. And so there could be massive covering, and this thing can just shoot. I mean, as they used to say with GameStop and such, to the moon.
Carvana got a couple opportunities there. I'm going to go ahead and queue us up for this next name while I take care of this little rascal here in the back.
Live. Can't beat live.
We've got Lynette from Morro Bay, California, who's interested in a name that we've covered a handful of times, and that's Intel, ticker symbol INTC.
All right. So, you know, Intel isn't one of the bigger players like NVIDIA in the AI market, but there's always going to be room for technology. And, you know, with the proliferation of ETFs and correlation, when all of tech goes up, everything goes up with it, right? So what I'm seeing here on the chart, Lynette, is that Intel gave me a signal that it had bottomed out, but I haven't quite gotten, maybe I got some follow through on Valentine's Day, but it's kind of, you're getting a second opportunity. You know, we've got basically tested support around $42. I'm going to zoom in here a little bit. You know, this would be a good opportunity in my mind to either pick up some Intel stock, and I would buy it in lots of 100 so I could then sell, you know, option contracts against it in the future. Or, you know, it doesn't hurt to set up an initial covering position that's a back month option. So to be safe, we'll go deep in the money, far out in time. And I'm thinking, you know, 8 months minimum. So maybe even going as far as the January 2025, the leap for 2025, get me some of those options. And then, you know, I'd set something up like, for instance, it looks like we might have some sort of level of resistance at 50. I might want to go check a price by volume chart or even a point and figure chart to see what 50 has, you know, hidden for me. But maybe about 40% up higher from 42 to 50. So maybe around $52, $53, $54. If I start trading higher than that number, I'm not going to worry about selling premium or anything like that. I'm going to look at how I can get rid of that initial covering position. But if I get any sort of top reversal before then, you know, maybe $53 and less, I'm all about turning this into an income trade, selling a near-term at-the-money option, buying a protective option down near either my break-even price or maybe below this level of support, you know, 3 to 6 months out, and then just rolling those out cycle by cycle, creating kind of an income stream on those two option trades. But again, I want to pass it over to Dan. What are your thoughts when you see this guy? And you've got kind of the intel behind it, intel behind intel.
So from a fundamental standpoint, well, let's start with the technical standpoint. Fundamental standpoint is a little more interesting. From a technical standpoint, if you look at, is this my chart? Oh yeah, it is. Okay.
Yeah.
So look at this chart of Intel, right? So, okay, you know, went from late October from $33 to $50. Okay. You know, big move, right? Look at NVIDIA, NVDA, and it's just like, you know, that same time frame went from 400 to 750. You know, I mean, it's not able to do the math quite exactly quickly in my head, but
kind of the same move, right?
It is kind of the same move. But what's really interesting here is that NVIDIA's 5-year average PE ratio is 66. All right. Now that's a high PE ratio. Part of that has to do with it's a tech stock, and we've been talking about AI for a couple of years now. I guess the buzz sort of pushed the price up early. 5-year average PE ratio is 66. Right now, his PE ratio is 87. It's fair amount more. So that seems, kind of crazy. Maybe it's a little overpriced. Now we go back to Intel, and Intel's 5-year average PE ratio is 14. Significantly lower, which is pretty interesting. Right now, its PE ratio is 106. Craziness, right? So, like from a fundamental, technical standpoint, fairly comparable move. I don't know which one beat it out by which, but from a fundamental standpoint, I mean, Intel's massively more overpriced than NVIDIA. And even just looking at the straight PE ratio, 87 versus 106. And for those of you who don't look at a lot of fundamentals, it's hard to learn how to read all these financial statements and all these things and be the next Warren Buffett. I mean, in my opinion, a real nice, easy little shortcut is the PE ratio. Just look at that, because that's really where stocks are valued on. They're valued off what have the earnings been, what is the price for me to get those earnings as an owner of this company. And if you have to bet on one, you look at that chart of NVIDIA and you read all the headlines of NVIDIA and you're like, oh my God, this is massively overpriced. And maybe it is, but not really compared to Intel.
Right.
That's a good point.
Yeah. So what's nice about that, right, is that maybe we could, if it does continue to go sideways, choppy, or even a little bit down, some of these premium trades might be the better strategy for trading it versus trying to trade it directionally or take advantage of that upswing. Is that what you're thinking?
Yeah, I mean, for me in my trading, it's always some sort of option move, and I look at the volatility chart here.
Yeah,
and this is kind of an interesting one because it's a little bit of a it's a little misleading that can lead to a misreading. Where the implied volatility, which is the red line here, is in the top half of the 6-month range. Now, if you're not familiar with what implied volatility is, forget what you've heard. I'm going to tell you the straight dope here. It's how cheap or expensive the option is. Don't overthink it. That is what it is. It's a measure of supply and demand. So we're kind of in the top half of that 6-month range. And if you eliminate the buildup going into earnings here and the buildup going into earnings here, it's really fairly high. Now, the other thing we measure it against, though, is historical volatility. It looks like historical volatility is significantly above it, and mathematically it is, but that's really only because of this one-day event, this earnings event, where we got this big, massive gap. Because the way historical volatility is calculated is we take the last month of closing prices and we find the standard deviation of it and annualize it. So when you have one big, massive deviation in closing price,
throws the data
way off. And so really the historical volatility is a lot closer to where it was before the state, 33. So yeah, this is a nice opportunity for premium selling, but you got to be careful in this market.
Yeah.
Always. All right, so that's Intel.
All those nuggets.
Let's move into our last and final name in the speed round. Another tech name, another veteran. This is Kevin from Boston, Massachusetts. Interested, AJ, in Hewlett Packard, HPW. That's a company that you used to work for, right?
Yep. Yeah, and actually it's HPE, Hewlett Packard Enterprises. I think that we had I put a typo into our notes, but HPE. So Hewlett Packard, they broke off their stock into two pieces. One is more of the hardware and one is more of the services. This is more of the services side of their business. They kind of following the path of IBM getting into their services and things like that. Again, boring ass stock, in my humble opinion, has been stuck in the same range. I mean, if I keep going back even further in the charts, I've been trading in this range. And I actually remember working there, and intentionally the powers that be, the board and the executives, would always like to keep the stock in a certain range. They always got kind of excited if it went out of the range, either the top or the bottom side, and we would take, I was involved in the marketing department, and we would always be put on high alert when that happened to try to create things on the fundamental side, on our business side, to make it come back into this range. So they like it there. Investors like it there. They give a nice dividend to investors, or they give a dividend to investors. In my mind, great stock for trading premium against. I got a whole bunch of shares when I left Hewlett Packard, and I've been selling premium against it for over 20 years now. The signals have been getting a little bit muddy on this particular symbol. You can see, again, these are my end of day signals, and then I look for trading day follow through. And before I get my trading day follow through, my signal gets canceled out by the opposite signal. And so I'm still waiting to see if we're going to be bottoming out at 15. But I wouldn't mind adding some more position to my long holding on Hewlett Packard. Like I said, I've been selling premium against my holding on Hewlett Packard, and I got a few shares when they did this, of both types of company. I've been selling premium against that for 20 years. It's just a great symbol that has produced ongoing income for me and my family for years. So I could see adding some more back month, or even some underlying symbol to this holding of mine, and then selling premium every time I get to a top reversal. And so that's kind of my thoughts for you, is to wait for the signal, and then maybe get some medium to long term position in hand, and then be prepared to sell premium against it. What do you think, Dan?
Yeah, so this is one where, and let's get back to the volatility chart. The volatility has been climbing and climbing and climbing since January 12th of this year. And there's a reason for that. It's because earnings is coming up. Earnings is February 29th on this, which is about almost 2 weeks away. And if we look back,
it only happens once every 4 years.
Yeah.
Leap year.
That's right. And it didn't happen 4 years ago, if anybody took notice. Little trivia question for anybody, know why that didn't happen?
No, why?
COVID.
No, it's better. I just learned this recently. This is a crazy thing.
Yeah.
So we think of leap year, and like, what do we know about leap year? Every 4 years we add an extra day in February, but that's not the whole thing. Like the Gregorian calendar that was developed, like, geez Louise, by the Catholic Church a million years ago, not a million years ago, but like hundreds of years ago.
Right.
The leap year is just part of it. In leap year, we add 1 day, and then it's every 100 years we subtract 1 day, and it's every 1,000 years we add 1 day. And it just so happened that
they all canceled each other out.
Yeah.
Oh shoot.
Yeah.
That's awesome.
Yeah.
Now I'm gonna have to go Google that after the show's over.
Yeah. It might be I think the middle one might be 200 years or something. That's how we get to. Yeah. But anyway. So yeah, crazy. So anyway, so I look at this, and we've got this volatility really, really climbing. Now they only have monthlies; they don't have weeklies.
Yep.
So right now, any trade that you make is going to have earnings within it. Mm-hmm. So we want to take heed to that. I personally, unless I'm doing one of our earnings trades from our earnings trading system, I don't like to have credit spreads or other iron condors or butterflies or anything on going into earnings, because there's just too much potential for something to go against you.
Absolutely. Preaching to the choir on that one.
Yeah. So, so I love the idea of looking at it for opportunities to sell premium, but I would probably wait until after our extra day this year.
Let's go into March. Yep. I like it.
All right. Well, thank you for that insight, Dan. We appreciate you hopping on the show. I enjoyed some of the nuggets. I know that the viewers will. Once again, the link to sign up to that webinar is in the chat. We'll go ahead and put it in our little scroll bar. Head on over there, sign up. The webinar is Wednesday, February 21st. What is that? 4 p.m. Central or Eastern? Is that Eastern or?
I don't know.
I think that's Eastern.
Oh.
I think that's Eastern.
So
I think it's
my
3
time
p.m. Central. I think it's 1 p.m. For those folks in the Californias, Seattle, all those areas.
If you sign up, it'll auto set to your time zone. So just look for that email. Head on over there, sign up. It's going to be a great time. Dan, thanks for coming on. Thanks for giving us some insights. Head on over to his Twitter. Head on over to his YouTube. Head on over to the site, markettaker.com. All the links are there at the bottom. Hit the follows, hit the subscribes, and be sure to catch him at the webinar. Thanks for joining us, Dan.
Hey,
thanks, Dan.
Thank you so much for having me. Much appreciated. Have a great day.
Take care. All right. That's going to be an exciting little event next week, AJ.
Yeah, in fact, I think just to correct on the time, I just checked it out myself. We're going to be doing that at 7 p.m. Eastern time. That means it's going to be 4 p.m. for you guys on the left coast, on the West Coast. And, you'll extrapolate your time zone. Or as Sip said, when you hit that registration link, it will automatically adjust for whatever time zone your computer's in.
Yeah, it's like using the 24-hour clock, which is throwing me off a little bit.
Yeah.
All right. Well, that was a great little remix to the weekly show.
He definitely is a perfect complement to some of the stuff we've been talking about. So, guys, you want to check him out in this where it's not going to be in our AJ Brown show format, where he'll be able to spend a whole hour talking about some of his specialties. So you'll want to check that out. I'm going to be there for sure. Not just introducing him, but taking a boatload of notes.
All right. So once again, the link to that is in the chat. AJ, heading into the close of the week, it looks like the S&P just went positive. Anything we should be keeping an eye on heading into next week? What's on your horizon?
Well, I'm going to take inventory this evening, Sip, of any of my option positions that expired today. If I haven't already closed them out, I'll see where they land, whether I have to deal with some options being extra. And don't forget, folks, Monday is a market holiday here in the States. Most of the U.S. markets, are going to be closed. So next week is a short week. That means you have an extra day this weekend to kind of catch up on your watch lists, catch up on your trading strategies. Make sure you have all your trades planned out. And if in doubt, don't forget that you want to paper trade, take advantage of any trade plans you come up that you have doubts about. Still trade them in your simulator logs, trade them in your paper logs, see how they work out. That experience is priceless, the real-time experience. So do all of that and keep it going, right? Because just like Dan, I mean, this guy is able to pull things out of the back of his head. Some people say that about me, but Dan takes it to the next level. And it's just because he's been doing it, repetition. And you get the same experience whether you trade it live or not. I have some folks who come to me and they're like, oh, well, I planned this out, but I didn't feel confident about it, so I just let it go. And then I checked in weeks later and it had done really well. I wish I was following it in real time. Follow it in real time. Get that experience, because each one of those nuggets, whether you're trading real money or not, will stay in your psyche and you'll be able to use it later. So, keep repetition is key. Repetition is key. I would never take, weeks off of the gym, because I know repetition is building and repetition is key. Well, it's the same thing with your trading. So that's my final words there, Sip, for the week.
That's true. Monday is President's Day, so I hope everyone enjoys
as a good president,
enjoys the day off. Once again, appreciate everybody tuning in. AJ, appreciate your time. If you've enjoyed the broadcast, which I know you have, head on over and hit that like, hit that follow, hit the subscribe button. Especially on YouTube, we're about to hit that 1K mark. So, help us push through that, because we've been looking at that mark for quite some time. And if you have any questions, feel free to leave a comment, hit us in the DM, head on over to the website, and someone will get back to you as soon as they can. Otherwise, we'll catch you guys next week. Appreciate everyone's time.
See you later, guys.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.